Right. So just to recap, we were talking about the trial balance and why the totals in the trial balance should equal each other. And we said that the main reasons for that is because of the double entry accounting principle or practice that we're employing, where every transaction is going to affect at least two accounts, right? So if we buy an asset for cash, let's say we buy a car, right? We're going to have to debit the car account or debit the vehicle account and credit our bank account or cash account. So it's, let's say it was for $100,000, you'll have a debit for 100,000 and a credit for 100,000. Additionally, it serves as a visual aid. So you will see when I show you all the trial balances later on when you complete some questions, that is what we are going to be using in our next lesson or as we move on in order to prepare our financial statements, right? So we're okay with that. Now, the importance of balancing the trial balance totals, right? So the total debits and the total credits in our trial balance is really important for us to show or to prove the financial accuracy of the financial statements that we'll have to prepare later on using the same trial balance, right? We're going to have to prove or satisfy users of the account. So you may have investors, you may have management, you may have the government, you may have banks, other people that need to look at the records. If the totals in our trial balance doesn't match, it is an indication that we had some errors where our double entry was concerned and we need to correct it. Now, there's a significance as well too. Balancing the trial balance is, as I just mentioned, is going to provide assurance to those users of the accounting information that the reports that we are producing is reliable and trustworthy, right? So it's important for our trial balance to balance. So uses of the trial balance, we have error detection, right? It helps us to identify errors in recording transactions or maybe posting mistakes, right? You made a, let's say you paid rent for $500 cash and the person was recording that transaction. They already debit the rent expense account and then they took a phone call. After they came off the phone call, they went back and they went on to something else and they forgot to credit cash or bank, right? Human error, right? It happens, right? They got distracted and they didn't complete writing the transactions or entering the transactions in their book, right? So what happens in a situation like that, right? In a situation like that, we may not know that that happened until we are actually doing our trial balance and preparing our financial statements. The other use, as I keep mentioning over and over, is the preparation of the financial statements, right? In order to prepare the financial statements, we need totals. We need totals of sales, of purchases, of expenses, various expenses, of income, right? Because apart from expenses, you also have things that the company might be doing to generate income apart from sales. They may be renting, for example, there's a small business space in my area. They're really a bookshop, right? An internet cafe. They sell books, they do printing stuff, that type of thing. But at nights, there's a grill man. He does like gyros and burgers and fries. He uses the car park there. So he has a little one of those food trucks, right? That will open up there in the night. He brings out tables and chairs and set up, and he runs that day. So the stationery store, the name of it is Crayon Box. They are more than likely receiving some sort of rental income from him. So that's a form of income. So that as well is recorded in our income statement, but it's separate and apart from things like sales, right? So if their main function is the selling of books and selling of stationery and things like that, right? This is a, if you want to call it a side hustle, right? That's something that they're doing alternative to their main form of business. So we will have to include that in our income statement. And we will also have to track that in what we will call our rent income or rent receive account. So in balancing the accounts, all of these things will be shown in our trial balance, and then it will filter into our financial statements. Everybody with me so far? Give me a thumbs up if you're okay so far. Yeah? Nice. So another important use of the trial balance is our verification of accuracy. Again, we are comparing debits and credits, and we are trying to verify the mathematical accuracy. Recording it right now, right? So don't worry, it's recorded. We missed the first part, which is really introductions, but I think we got the gist of it. So I'm recording it and I'll upload it to YouTube tonight and share the link with you guys. Probably during the day tomorrow, I should get uploaded to YouTube. Now, as I mentioned before, there are also some errors that are not detected by the trial balance. And you'll say, well, how is that possible? We just said that we check in our mathematical accuracy by comparing debits and credits. But there are some errors, like the errors of omission, commission, errors of principal, compensating errors, and transposition errors that will not be detected by trial balance. An error of omission happens when we totally forget the transaction, right? No source document came in, or you was in the middle of doing something, you went for lunch, you come back and you pick up somewhere else, and you entirely forget to enter the transaction, right? While you was doing your error of omission. The trial balance is not going to know that you forgot to do it, right? Error of commission. This involves putting the incorrect amount to the wrong account, right? And there's the error of principal, there's transposition errors, right? And there's compensating errors. Transposition errors means that you enter the incorrect amount. Maybe you're supposed to be $573 and you put it as $537. Compensating errors cancel out each other. You probably entered, what's a good example of a compensating error? Let's say, for example, you stated more for purchases, right? So you purchased more than you needed, and then at the same time, let's just say it was a cash purchase or something, and let's say you wrote the incorrect amount, or it was supposed to be 200 and put as 300, right? So you should have credited your cash for $300, right? And at the same time, let's say another transaction occurred and in your cash book where you should have put $300, you put 200 there and 100 more for something else. So it's still going to balance, right? It's going to cancel each other out. That's basically it's an offset transaction. Now, these errors that are not detected by trial balance, we will come back to them and we'll do them as a separate class, as a separate topic, right? Because we'll do that under correction of errors. Okay? So moving forward. So preparing the trial balance. How do we prepare the trial balance? Well, first off, you need to get a list of balances, right? And to get that list of balances, you usually have to balance all your ledger accounts, right? Daniqua was saying that she had some issues with balancing accounts. Let me see if I could just get something here for you quickly where we could look at that. No. Just want to share like probably one or two examples. So I have a Google Classroom with all your notes. What I'll do is I'll probably create a separate one for you guys. And I'll send you a link. So you get all my notes. Oh, this is the wrong class. Textbooks, resources. So I'm gonna take a quick look at balancing accounts. Okay, fine. No, this is not it. All right, so we use the whiteboard instead. Anybody else have issues with balancing accounts? No? Sarah, you? Okay, where are you? So that now. Denise says yes, me too. All right, let's get the whiteboard. All right, so let's look at some different examples, right? And then we get back into our trial balance. Now, let's say we have to make up some transactions, right? So let's say we have a bank account. Bank account is easy to balance, right? We'll have a number of transactions that would happen throughout the month. So let's say we're talking about the month of May. May 1st, we had a balance brought down of, let's say, $6,000. And in May month, let's say we did some purchases, 500, paid some wages, 600, we purchased some cleaning supplies. So just making up these random transactions, right? We did a cash sale. Right? Let's say those are all the transactions to the month. Now, we want to balance the account. We are now at the end of May, it's May 31st, and we want to balance this account. Can anybody tell me what's the first thing that we need to do? First thing to balance the account, what do we need to do?
Add the total on both sides.
Add the total on both sides. So what I need to do to balance the account is to figure out, right? And let's say I'll put it on another color, right? I need to find out what's the total balance on this side. This is my debit side. And this is my credit side, right? So the total here is 7,000. Now, I'm not writing this in just yet, right? I just need to find what are the balances on both sides, because more than likely, one side is going to be larger than the other. Right here we have 5 and 6, that's 11, 11 and 3 is 1,400. So we could clearly see that my debit side is larger than my credit side. Now, look at the name of this. This is saying balancing accounts. So you want both sides essentially to have the same amount. And that balancing figure is going to be the larger of these two figures. So my balancing figure is 7,000. So let's write that in here. But the problem is on this side, if I want to get 7,000, I am missing a certain amount. How much am I missing? I am missing 7,000 minus the 1,400 that is already there, right? So this will give me what? 6, carry 1 across, 10 take away 4 is 6, and then 6 take away 1 is 5. So it means that I need a balancing figure, right, Sarah? I need a balancing figure of 5,600 here in order to get this credit side to add up to 7,000. So I will write on May 31st, right? Because we balance accounts at the end of a period. So it's a month, a quarter, whatever, we balance at the end of the month or the end of the period. And I'll put here balance carry down. Why am I putting balance carry down? Because this is the amount that I am going to be carrying down, or carrying forward is another word that they use. So they can put CF, carry forward, to the following period, because you're going to start a new month now in June. So every month I want to start with a new bank balance. So throughout the month of May, I had money coming into my bank account, because on this side is in and on this side is out. So I had money coming in, money going out. What's the balance at the end? Just like how you'd put the ATM card inside of the ATM machine to find out what your balance is. We need to balance these books. So at any point in time, the manager picks up the book and they need to know, well, what's the bank balance? They have something, well, you know, that they could work with. So our balance, and I'm abbreviating here, brought forward now, because it's no longer carried forward, it's brought forward, is 5,600. So I am now starting a new month with 5,600 in my bank account. This figure of 5,600 is the figure that is going inside of my trial balance, right? So my trial balance is made up of a whole heap of balance brought forwards from different types of accounts, right? Let's take, for example, another account. Let's say we have a sales account, right? Now a sales account is going to record sales that was made for the month. And these sales could be comprised of both cash and credit sales. So this is debit, this is credit. Now think about it. If we made a sale, like up here, we made a sale here for cash on the 20th of May. We are debiting the bank account. So the contra entry, or the, not the contra entry, the other entry, the corresponding entry will be a credit in my sales account, right? So let's put that here actually. We started that. May 20th, we had a cash sale. They pay in the bank $1,000. And let's just say the remainder of my sales are credit sales. So May 21st, a man called C. Brown brought $400 worth of goods. On May 30th, J. Tone bought $600 worth of goods, right? And let's say that's it. Here, unlike the bank account, everything is on one side, right? See now, Sarah? Did you see now? Everything on one side. So to balance this account, there's actually nothing here. So when I add this up, this is going to work out to be $2,000. In order to get here to be $2,000, I need to have a balancing entry, a balance carry forward of $2,000. See that? And that is going to give me, sorry, not me, this is now going to be June. June 1st balance brought forward now of 2,000. So this is the total sales that was brought forward. You okay with that? Give me a thumbs up if everybody all right with that. Somebody wants to join the call. Screen this one. All right, so we got it out. So I'm gonna switch back to our trial balance. Oh, wrong one. Now we're going to talk about our process of creating a trial balance. All right. So what I'll do is I'll give you guys some practice questions to balance some accounts so you can get a little better at that, right? Good. So our step-by-step process of creating this trial balance is first to collect all of the ledger balances, similar to what I just showed you there. You're going to have to balance accounts for assets, liabilities, capital, revenue. Remember I was telling you about the crayon box, right? They, apart from their revenue from selling stationery, they also get rental revenue, right? So we have to balance all of those accounts, balance expenses, right? Light, water, internet, salaries, wages, cleaning, right? Even if you have license fees, you're using Zoom or something and you have to pay license fees in your business, that's an expense. So you are balancing all of your ledger accounts, right? After you do that now, you're going to arrange the account balances into two columns. You're going to list debit balances on the left-hand side in the left column and credit balances on the right-hand side. Now, this is the part where some people stumble a bit because they're uncertain as to which accounts have which type of balances, right? Now, adequate amount of practice in balancing accounts, after a while you start to begin to pick up on patterns. You realize that asset accounts usually have debit balances, liability accounts have credit balances, capital accounts have credit balances, provision accounts have credit balances, revenue accounts have credit balances, expenses have debit balances. So after a while you pick up on these things. So if you have, let's say for example, a list of balances, you will know whether these types of accounts should have debit or credit balances. After you list them in this manner, and I'll show you example just now, you're going to sum all in the debit column and sum all in the credit column separately to determine the total number of total numeric value of all your debits and total numeric value of all your credits. And then finally, you're going to verify that they are equal. You're comparing your total debits to your total credits. If they are equal, then your trial balance is balanced, right? And your mathematical accuracy of entering these transactions was solid. If it's not, then you might be required to investigate and correct any kind of errors that you may have in your entry, right? So here's an example of ending balances of ledger accounts, right? So you collect all of your ledger balances, right? Let's say, for example, you have assets, you have liabilities, capital, expenses, as I mentioned, revenue, sales revenue, interest income. So let's just say a business has a fixed deposit account, or it has some sort of mutual fund where they save money. If they receive interest on that money that they save in it, that's a form of revenue. Commission, right? Everybody have phones. Anybody have a postpaid plan? A prepaid plan, sorry, on the phone. You have to buy phone cards. More thumbs up if you use a prepaid phone. You buy phone cards. Anybody aware of stores that sell phone cards? Yes, right? That's a form of commission. They don't own the phone company, right? So if I have a store, you know, and I'm located in maybe a downtown area, my line of business is not in phones. I might be a food store or maybe a little mini mart, right? But I might decide to sell phone cards. I will earn a commission from my phone network company, right? In Trinidad, we have Digicel and another one called B Mobile, right? So Digicel, they will pay you for selling the phone cards. You will earn a commission on every phone card you sell. Maybe there's a fixed amount or percentage. I don't know how they do it, but as a form of revenue, right? So all of these are examples of different balances that can be collected. And we need to know, secondly, how to organize these and put it in this format. So I had the list of balances on the previous page, right? Cash, accounts receivables, inventory, equipment, accounts payable. Receivables are debtors, payables are creditors. Loan, capital, sales revenue, rent, wages, right? And then I have to be able to put them in columns now. Notice here, right? I have balances separated and arranged in two columns, one being debit, one being credit. The challenge for most students is knowing which of these balances to put on the debit or credit side in a trial balance. And to assist with that, I've created this little table here for you guys that will help you to determine where each ledger account would appear in a trial balance, right? So you will know whether it should have a debit or credit balance. As I mentioned earlier, assets usually tend to have a debit balance. Liabilities, be it current or long-term, have a credit balance. Capital is credit, expenses debit, revenues like the selling of the phone cards or receiving interest on some fixed deposit, that's a credit. Drawings, because you're taking, drawings is something where you are taking capital out of the business. That has a debit balance. Provisions for depreciations, provisions for bad debts. Somebody have trouble with that. The notes in the account. I think it was Tia. Was it? Did I get correct? Right? Those type of accounts usually have credit balances. So if you learn this table, it's easy for you to one, either prepare a trial balance, or two, if you're given a trial balance with errors on it and you are asked to correct the trial balance, you will know where balances should be. All right, give me a thumbs up if you're okay with that. Right now, these slides that we're looking at here, I've already sent them inside of the WhatsApp group, right? So you're gonna find all of this inside of your WhatsApp group. And we're recording the session too. After we do that, and we arrange them in debit and credit columns, all we are really doing now is finding the total of your debit and credit columns. So we are adding up our total debit and we are adding up our total credit, and we want to verify the quality of those. We want to make sure that both of them is reading the same here. One is saying 21,500 and the other is saying 21,500. So we're good to go there, right? That means that we did a good job in terms of our double entry bookkeeping. So just to get some practice, here's a question for you to try. What I did to assist is I included the table that I told you guys about, right? So you help you know which side you're putting your cash, your inventory, your loan. You'll know whether it's a debit or credit in the trial balance. All right, so I want everybody to take a minute. You're going to use your notebooks and you're going to prepare a trial balance soon. All right, now you could use the same format as I had here before. Just use account as a heading, right? And a debit and credit column, all right? If you're doing it for a business, then you'll have to put the business name to the top and you usually write trial balance as at, if today is the 4th of June, we put the 4th of June, 2024, and then we do all of this. But for the sake of simplicity and time, you're just gonna put account, see here, account, you list the account, and then you're going to put whether it's at a debit or credit balances, right? I would suggest grouping all your debits together and credits together so it's not all over the place. All right, so we're going back to the question. Here's your question. Table on the right is telling you or reminding you whether you have a debit or credit balance and the trial balance for these ledger accounts. All right, everybody understand the activity? Just give me a thumbs up if you do. Yeah. All right. So you're doing this for me, and then we look at the answer on the other slide.
I don't understand that activity.
All right. So what you're doing is you're going to prepare a trial balance, right? So the trial balance, basically, what we will do is, you know what? Let's do the first one together. I'm gonna cut this out, and let's go to the whiteboard. That was Sarah, right? Sarah, that was you?
Yes, sir.
All right, nice. Cool. So, one sec. Where's my whiteboard? Let me make this size smaller. We need a switch. All right, can you guys see the whiteboard? Yeah. All right. So we want to prepare our trial balance, right? So I'm gonna put here number one. We're doing a trial balance.
I can't see the whiteboard.
Just a sec. Let's check it and see why that's happening. See it now?
You can see it.
Yeah, you can. All right. All right, nice. So we want to do a trial balance. So we need three columns, right? One column is going to be for all of my accounts. So the accounts are like these things here: cash, accounts receivables, inventory, equipment, accounts payable, loan, owner capital, sales revenue, rent expense, wages expense. These are all the accounts. So I could actually just go ahead and write out all of those there. All right, so let's just put this as a column here. Let's get another column. Let's see. One here. So this is going to be for debit balances, and this is going to be for credit balances. Right. Then we need our accounts. So we have cash. We have accounts receivables. I just abbreviated receivables, right? Then I have inventory. And I have equipment. Then accounts payables abbreviated again, right? Then we have loan. So what I'm going to do now is I'm taking these balances here, right? These balances here. And I have to figure out whether I'm going to put it in this column or this column. This table on the side here, this one, is going to help me to determine whether or not these balances belong in a debit or the credit column. Now, assets are things that we own. So let's just go through, and we're going to put them in one of these categories. It's either asset, a liability, a capital expense, a revenue, a drawing, a provision. So cash is an asset. So I just put A next to it. Accounts receivable, these are debtors. Accounts receivable are people that owe us money and we are due to receive this money from them. So essentially it's our money, right? It's the same as cash. It's just I do have the cash right now. So the money that I have to receive, right? So this is also an asset, right? Because I own that. That's my money, for the business money. Inventory, another thing that we own. So that's an asset. Equipment, something else that we own, asset. Accounts payable is the opposite of accounts receivables. So this is money that we have to pay out, that we are owing, right? So this is a form of a liability, L. So accounts payables are like creditors. Remember I mentioned the hardware store at the beginning of the slides, and I said the hardware we might buy from suppliers on credit. So maybe there's a paint company like Benjamin Moore or something, and we took a pallet of paint, right? 80 or 100 buckets of paint, and we have 30 days to pay them. That's accounts payable. That is due. We haven't paid that as yet, so that's a liability. Well, loan, that's kind of self-explanatory. That's a liability as well. Capital, well, they're using the word capital, so that has to be capital. Sales revenue. Revenues are all credits. So I could just put R there for revenue. Expense, this is an E for expense, and this is an E for expense. So now that I've identified or I've classified each of them according to a specific type of ledger account on this side, it's easy for me now to determine whether or not that particular account is going to have a debit or credit balance in a trial balance. Does that make sense to everybody? Give me a thumbs up if you understand that. Is the approach making sense to you? Yeah? Serious, good, nice. Everybody, right? Perfect, good. So now that I've identified this as these things here as assets, I know for all of these here, up to here, they're all going to be debit balances inside of my trial balance. So I could go straight inside of here and I could say, all right, cash going on this side. So 6,000 here, drop down the debit column. Accounts receivable, 3,000, drop down the debit column 2. Inventory, 2,000, drop that right inside of here. Equipment, 10,000, right here. And then I know, get another color. These here are liabilities, so they have to go in the credit. So I can come back here now and I can take those figures. Accounts payable, that's 4,000, right? Drop that right here in the credit column. Loan, 5,000, put on the credit column. Everybody understand that now? Yeah? All right, do you think you could finish it up for me? So you're gonna write the rest of these accounts underneath here, right? So like capital is gonna have to come here, sales, revenue, rent, wages, and you're gonna use this same method that we just discussed and put the figures, these figures here, in the correct column. And then when you finish, you're going to add up everybody in the debit, everybody in the credit, and make sure that those two balances at the bottom is the same. Everybody understand now? Just give me a thumbs up if you understand. Raise your hand if you don't understand and you need me to just go it over one more time. All right, so everybody clear? All right, so I'm going to give you guys a minute, 2 minutes. So you can just copy what I have there and just add in the other figures. And then you're going to add up both columns, check to see if they balance, and boom, there's your trial balance there. Yeah? So I'm going to pause the recording and you guys going to just attempt that question for me. Right, so if you follow the same process as we just discussed, this is what your answer would look like for question 1. The total of your debit column is going to be 22,000. The total of your credit column is also going to be 22,000. So our trial balance shows that everything is fine and we balance. Right, just give me a thumbs up if you got this answer. Everybody? Yeah? All right, do you want to try one more on your own from scratch? So same thing again. This is the list of balances. Here's a table just to remind you which accounts you're going to debit or credit, right? Remember the steps that I did just now. We want to first go through this list we have on our left-hand side and classify everything as either asset, a liability, capital, expense, revenue, drawings, provisions, right? To make life simple, I actually grouped all the assets together. Then if you notice, I put the liabilities together, then capital, then revenue, then expenses, right? So that should be an easy fix for you guys. Right, so you're just listing out just as we did before, all of the accounts in one column on the left, the 3 columns in total. So you put in all the accounts in your first column. Then you're going to put their balances in the respective debit or credit columns. So here, all of my assets would have been debits, all of my liabilities would be credits, capital revenue is credits, assets is debit. Expenses will be debits. Okay? Is everybody all right with that? Yeah? Okay. Jenny, you all right with that? Janiqua, Dia? Lily's good. Sarah, we good? Lawanda, you all right? Odlin is good too. Dashileen, I don't think I met you. I missed you when we started. Are you okay? You following along? Did I pronounce that correctly? All right, so I'll tell you what. You're gonna try this one for me, and then you run over just a little wee bit. What I'll do is I'll do a quick summary on your income statement. So that'll be like a prelude to our next lesson because we want to get into the financial statements because that's where you guys are struggling, right? What we would look at after you finish this question is the structure of your income statement and the structure of the balance sheet. Okay? So finish this up for me, and then we're gonna look at the introduce the financial statements. Yeah, sounds good. Okay, nice.